JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 14th of February. So welcome everyone guys, welcome to this Monday's morning live session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So check us out here on jfdbank.com, and click on the research tab right there on the top. So now then guys, welcome everyone again who's joining in right now. I can see somebody in the chat room here. Good morning to you too, Kai. Good morning to everybody else as well who are joining in. Of course, it's a special day today if you're celebrating it. I mean, happy Valentine's Day. But if you're not celebrating it, well, happy Monday, guys. So, basically jumping into the charts now. The first one I want to pick up here is Nikkei 225, and as you can see, it opened up with a nice gap to the downside and declined quite significantly. Now, one thing that I need to get rid of is this downside line, no longer needed. And what I can see here is that this hurdle here, the one that I talked about previously, the 26,955 level, did act as a very nice area of support, and that's the lowest point of August of last year. Now, if you're looking for some, let's say, a move towards lower levels, then certainly a break below this hurdle is needed. And until we're going to get that, we're not really going to, let's say, aim lower. Let's say for now, I'm just going to kind of maybe stick a little bit to the cautiously bearish approach. Again, yes, on one hand we do have an index which is trading below this downside line taken from the high of the 14th of September. However, I don't want to rush into anything. I just want to go slowly on this, step by step, and if we do drop below this 26,955 territory, I'll slowly aim for lower levels. Now, initially, of course, the ideal scenario is to aim for this lowest point of January, but again, I'm gonna take everything with a bit of pinch of salt. So it might get a hold up somewhere around here, maybe, and then we might be maybe even rebound and push back up here, and this way we will have a nice upside line here, and then basically this index will end up coiling up. I mean, we've seen such scenarios happening before. However, let's not jump into any conclusions yet. For now, let's go slowly on this one, and if we do drop below that 26,955 territory, then yes, I will aim for slightly lower areas. Now, jumping into the let me just quickly pick it up. Jumping into Shanghai Composite here, guys. Now, also not a very pretty picture. So far, everything's in line with the kind of the idea here that I mentioned before. The index is trading below some of these downside lines. Look at this. I mean, last week we had a perfect hit of this downside line, the one that I talked about recently. This one's taken from the high of the 4th of January, and well, boom, we got a hold up here, and then we started drifting lower. I mean, we also fell back below this 3,448 zone, and if we will stay below this, then well, certainly yes, we could go for that lowest point of January, and which is roughly around that 3,356 territory right here, and then we'll just take it from there. Again, as I would say, as long as it stays below this 3,448 zone, yes, I'll aim for lower levels, but there could be a bit of a maybe hold up somewhere around here. Again, we could see, you know, about a bunch of obstacles working out initially, but of course, if the sellers remain in control, then yes, we will continue aiming lower. So now then, just bear with me one moment. Yep, okay. Right, now then, jumping into the German index. Oh, and by the way, with Shanghai Composite, in terms of the upside, guys, I mean, this is pretty straightforward. I mean, we need to see at least a break of this downside line taken from the high of the 4th of January, and then, yeah, potentially more buyers could join in, because at the same time, we might see a break of this 21-day EMA, and this, you know, it could open the door towards the other, this other downside line. But again, like I said, if we do see something like that, we will, you know, I will pick up on that one later. But for now, it's leaning a little bit more towards the downside. Now, the German index, DAX. So this is a little bit of a mess, and basically we are still kind of coiling up here. As you can see here, we're stuck in between these two tentative, short-term tentative lines. Again, if we take a look at the cash index and see what's happening right now, you'll see that, well, the index did drift lower. The cash index did drift lower, and of course, mainly driven by kind of, you know, a sell-off in the U.S. market on Friday, and the cash index is currently sitting at around 15,115 zone. So quite a bit of a difference here from where it closed on Friday. So it's sitting somewhere around here, I would say, even I would say near this. Let's see where it's going to open up today, but currently we're just slightly near this upside line, or even maybe a bit below it, actually, I would say. Yeah, so yeah, that's not really looking good here for the buyers. And if you remember, I mean, I kept on talking for the past 2-3 weeks now, that keep your eyes on this. This, first of all, could be seen as a potential range. That's the first thing. Second, maybe it could be seen as a nice double top pattern here, with the neckline being the lower side of the range, and it could be seen as a possible head and shoulders, complex head and shoulders pattern, with yeah, also the neckline being somewhere around this area, around this you know, this lower bound of the range. So in that scenario, I mean, of course, in all this, we have a, let's say, a pattern which is kind of showing neutrality, and two patterns that are showing bearishness. Well, it's kind of outweighing a little bit more towards the downside. However, we've seen, you know, these things not working out in the past, so I always kind of, you know, suggest wait for a confirmation break, guys, because, for example, if it drifts lower and if it finds support somewhere near the lower side of this range, it could rebound, it could, you know, make its way up again. So let's just avoid, you know, any kind of possibility for, you know, a possible kind of screw up here, because again, it's a thing that everybody sees, and you know, if it suddenly rebounds from this area, yeah, that could be a lot of unhappy sellers here who were, you know, kind of entering it maybe a little bit lower. In a way, you know, some of you might advocate here, saying that, you know, maybe I'll jump in earlier and then, you know, ride the move towards this lower side of the range. Yeah, I mean, of course, could be the case, but then in that situation, I mean, don't get me wrong, I mean, it could easily reverse, even not even reaching the lower side of this range here. It might reverse even from here somewhere, and then, you know, you'll get caught out in this. And but of course, it's up to you guys. You do whatever you're comfortable with. I mean, the only most important thing is to have your stop loss in place, so that, you know, in case it goes against you, so that, you know, you wouldn't be hurt. Now, NASDAQ 100. So, beautiful sell-off on Friday here, and well, boom. I mean, we dropped below some of these key support levels. I talked about this level last week, the 14,471 zone, and yeah, we have fallen below this hurdle, and we also fell below the lowest point of October of last year. So, which was roughly around that 14,385 zone. So yeah, that's not really good, I would say, here for the for this index. And if we take a look at the cash index, the cash index is sitting at around 14,241.40 zone. So yeah, not far from where it kind of closed on Friday. So not a huge kind of shift. For now, I would say I'm leaning a little bit more towards the downside if the index continues to trade below this 14,471 zone right here, the highlighted one. If it starts climbing back above it, maybe there could be a bit of hope here for the buyers. But as I said, for now, guys, let's see how this is going to play out. Don't get surprised if we see maybe a bit of a retracement or something like that. So something maybe like this could be possible. But again, let's be very careful for now. For now, it's a tricky one, and I'm leaning a little bit more towards the downside, but I'm not really, let's say, strongly bearish on this yet. Now, the S&P 500. So, the S&P 500 also drifted nicely back below this downside line. I failed to, this is the reason why and I'm going to actually highlight this one. This is the reason why I talked about this barrier last week. I said that, wait, guys, wait until we get that break. And look at this. I mean, we got to move higher. We, came very close to that highest point of February, the current highest point of February, near the 4,595 zone. We failed to break it, and then we drifted back down and fell not only back below this downside line, but also below the 4,453 zone right here. So we drifted lower, and we found support near the 200-day EMA. So, what to expect next? Of course, as with the NASDAQ I just mentioned, I'm leaning a little bit more towards the downside on this one. However, I'm gonna be a little bit on the careful side here, because maybe, just maybe, let me just put this on the chart. So maybe, just maybe, we could see something of a not this, delete. Sorry guys, this is what I tried to draw here. So maybe, just maybe, we could see maybe a possible kind of a little range here. Like I said, we'll see how it plays around this 200-day EMA, because and this potential, I'm not gonna say it's for sure, but potential range idea. If it drops below this 4,414 territory, I will aim for lower levels. If it stays above it, then maybe we could see a bit of a rebound here again, and push higher. So for the upside, I mean, it's a little bit tricky here. I mean, probably I would stick to the same level here, this 4,595 zone, just to be a little bit more on the safe side. All this here, it could be difficult. And in general, I mean, I think I'm gonna get rid of this downside line, but I just want to give it another try to see if it actually, let's say, if we do rebound from this area, this area near the 200-day EMA, if we do rebound from it and push higher, will this downside line act some sort of as a nice good area of resistance? If it doesn't, okay, that's fine, and we'll search for something else. But just like I said, for now, I'm just going to keep it there. Dollar index, DXY, so pushed higher and continues to push slowly to the upside. We are above all of the EMAs again, and looking towards the upside on this one. However, I'm going to stick to my rule, and I'm going to stick to my idea that I mentioned last week. If in order to go for higher levels, I would prefer to wait for a push above this 96.2324 zone right here, which is roughly around that 50% retracement on the Fibonacci. Because up to here, I mean, it's doing good. It's quite performing well, but if it finds resistance near that 50% retracement on the Fibonacci, then well, another slide could be possible. So that's why I would, like I said, but if it overcomes that 50, then there's a greater chance that, you know, we could see maybe a nice move towards this highest point of November near the 96.94 zone, which, as you can see, coincides nicely with that 78.6% retracement on the Fibonacci. So yeah, if we, like I said, but again, as I said, I'm keeping an eye on this highlighted territory, which is at around 50% retracement on the Fibonacci, and then yeah, we'll take it from there. Quick mentioning of gold. So okay. Interesting. So we had a nice push higher. We kind of tested the upper side here on Friday. We had a nice explosion to the upside. We overcame this downside line taken from the high of the 1st of June. Yeah, we overcame it, but then we drifted back down. So in a way, we can see that it's kind of ignoring this downside line. So what we can do here is, first of all, get rid of it, but we can recycle this line. And what I want to draw here next is something like this. So you probably understand now where I'm leading to, but let's see if this is going to work out or not, guys. Now, this could be seen as a potential rising channel pattern. So we've kind of tested it. Let me just correct it. There we go. Capture the highs here. We tested the upper side of this pattern, and yeah, we started kind of drifting back down again. This, like I said, even if we do see a larger maybe drop here to the downside right now, let's say even if it falls, you know, further, let me just adjust here the levels. If it falls and if it stays, for example, below that 1854 zone, which is the highest point of January, then yeah, we will aim for slightly lower levels. But if this still could be classed as a temporary correction, because in a way it could drift a little bit lower here. I mean, it could maybe even test the 21-day EMA, but or this area right here, this key support zone. So I would even say that even if it drifts lower here, so by the time it could travel, let's say, to this area, to this 1830 zone, approximately around there, the 21-day EMA might, you know, come a little bit closer here. So this could be a nice potential target for a rebound. However, I'm not saying that this is exactly where it's going to go. For now, I'm going to just, you know, go slowly on this. I'm keeping an eye on the highest point of January near the 1854 zone. If we stay below it, then yes, I'll consider maybe a larger correction here to the downside. If we don't, well, I mean, the upside scenario is still not off the table, and we will, you know, continue aiming higher. Maybe we could even overcome the upper side of this rising channel, and then, you know, and then we could you know, aim for the highest point of November. But again, let's not overcomplicate our lives. Let's go slowly on this, and yeah, we'll take it from there. A quick update on WTI oil. So continues to push higher, and this is okay. Another thing that I've mentioned, guys, another thing that I talked about last week, I said wait for that confirmation break, and we needed that daily, the body of the daily candle, to stay below that 88.82 zone. But as you can see, we only flirted with it, with this hurdle, and we reversed back to the upside. This is what I talked about. I said that, you know, if we don't get that, well, we could easily, you know, push back up here and maybe even overcome the previous highest point of February near the 93.14 zone right here. And we overcame that, and our next target, this is where we're currently finding resistance, good resistance near the 94.89 zone. I talked about this level. This was my next target, and let me just scroll back here. So this 94.89 is the high of the 30th of September of 2014. The next target is 95.89 level. That's my next target, and that's the high of the 1st of September, or in other words, the highest point of September of 2014. And if you want, you know, another level after that, well, you can just basically aim for that 100. You know, like what's the kind of, you know, there's no point probably not reaching it anymore. But again, we'll go slowly. I don't want to rush into anything. I just want to go slowly, step by step on this one. For now, I would say, yeah, I mean, a great move to the upside. As long as it also stays above this upside line right here, we will continue aiming higher. Quick update on Bitcoin. I need to kind of quickly run through all these as well, the remaining ones, because they're also interested until I run out of time, guys. So Bitcoin, again, I'm not going to spend too much time on this one because, again, it's the same story, the same analysis is valid. I need to see that nice good rebound from this upside line. In general, as long as it stays above this short-term tentative upside support line, we will continue aiming higher. Overall, if we do break this upside line, then yes, a drop lower could be possible. Now jumping into AUD USD, guys, very quickly on that one, and here we have a pair which drifted back down. It fell back below this downside line. However, we're still struggling with the 0.7110 zone. I talked about this level, and I need a nice good drop below it in order to go for lower levels. I'm not getting that yet, so that's why I'm just observing the price action. If we do drop eventually below this, then yes, I will aim for lower levels. For the upside, pretty straightforward. I need to see a nice good move back above this 0.7170 territory, and then we could maybe consider a move higher. However, some of you might maybe look at this level right here, and we need to adjust a few ones here. So maybe the 0.7185 level, it's maybe this is for more confirmation. However, like I said, I will continue aiming. I'll continue looking at that 0.7170 territory. Where is that level right now? There we go. I think it's here. So yeah, this one right here. But like I said, either way, guys, we need to wait for that confirmation break. AUD NZD, so one of my favorite ones, and look at this. I mean, it's very, very technical, and right now we're approaching this key resistance barrier, which continued to hold last week, and this area is roughly around that 1.076670 zone, something like that. So just let me put this on the chart. So yeah, roughly around here, guys. I mean, 1.0770, that's what you can keep an eye on. For now, if we get a nice break above it, then, well, we will go for some higher levels. And another thing that I'll probably redraw this upside line, and I'll put it somewhere around here. Somewhere around this area right there. So basically, just to kind of show that we are kind of getting into a very nice squeeze right now. So let's see what's going to happen. Will we break this barrier, this key resistance barrier, or will we actually end up breaking the upside line? Either way, guys, like I said, keeping an eye on this area. For now, I'm cautiously bullish, but I need that confirmation break first. US dollar against the South African rand, very quickly. If you remember last week, I talked about this one, so the analysis still remains the same. I need that confirmation drop, and I need to see the body of this daily candle remaining below the 15.0630 zone in order to go for lower levels. We keep flirting with that, but we're not really getting anything. And we're not really getting even a move back to the upside. For the upside, I need to see, it's not going to be a level, I need to see a push above all of the EMAs, and then, yeah, I'll aim for the upside. The US dollar against the Russian ruble, guys. Boom, there we go. I mean, look at this. I mean, I talked about a potential head and shoulders pattern, let's see if that's going to work out, because if you remember, last week I talked about this. I said that wait, maybe we'll get a nice rebound from here, and then we'll push higher. Maybe it'll form a nice little right shoulder. We are forming that right shoulder again. Maybe I'm getting too excited way too early, but let's see if this is gonna start dropping back down here. If it then eventually drops below this hurdle, this 74.27, then obviously it's a nice head and shoulders pattern. If we start pushing above and we stay somewhere above that 77.33 zone right here, maybe we can actually scrap the whole like head and shoulders pattern idea. Good morning to Adin. Good morning to you too. Hope you're also having a wonderful start of Monday. USD CAD, guys. Again, this is a bunch of there are going to be a bunch of pairs that I'm going to quickly run through because I'm still watching them and looking at this. For the downside, I need to see a drop below the 1.2650 zone. For the upside, I need to see a break of this, at least a break of this downside line, guys, and then I'll slowly start, grinding higher, or I could start aiming higher. I mean, let's see if it's going to actually start grinding higher, but I will be aiming for the upside if we do break this downside line here. So again, the same analysis as last week, guys, but we are at an interesting spot here on USD CAD. Interesting spot on USD CHF as well, because we are above the midpoint of this range, and we are still above this upside line taken from the low the 24th of January. So in other words, we're kind of still leaning towards the upside on this one, and but I would prefer maybe a push above the 0.9275 level right here, just to be a little bit more on the safe side, guys. For the downside, well, let's get rid of this downside line. For the downside, maybe a drop somewhere below this little hurdle right here, the 0.9222 level here, and then yes, we could go maybe for the downside. GBP USD, guys, very interesting. Flirted a lot with this downside line last week, flirted with this 1.3628 zone as well, but failed to kind of remain above it, and we're back below this downside line. So I would say as long as it stays in between these two trend lines, I'm just kind of neutral on this one, and it's not really, it could drift lower. Certainly we could aim for the downside, especially if it falls below the 21-day EMA here. We could aim for that upside support line here then, but if you're looking for something a little bit more medium term, then well, we need to wait for that violation of one of these tentative trend lines. GBP CAD, now this one's a little bit more on the positive side, because, well, we are near this, let me just drag this highlighted territory right here, because this is going to be a little bit more valid. So we're keeping an eye on this hurdle here. This area, this 1.7292 level, and at the same time we're also keeping an eye on this upside line, which is maybe not ideal, but anyway, we'll keep an eye on it. So if you're looking for some downside, guys, well, we need to wait at least for a break of this upside line and a drop below the all of the EMAs here in our daily chart. For the upside, pretty straightforward. We need to see a violation, and we need to see the body of the daily candle remaining above this area, above this 1.7292 zone, and then we could go for some higher levels. Euro JPY, very quickly on this one. Beautiful rebound here from this area. First of all, beautiful decline on Friday here. Of course, the yen buying got increased because of the falling equity markets, especially in the US. But looking at this technical picture, we found a nice support near this 21-day EMA, near this downside line. If it stays above it, another rebound here could be possible. If it starts falling below this, we'll consider maybe a bit of a decline here, a further decline. Euro USD finally also drifted nicely to the downside. We reached the 38.2% retracement on the Fibonacci. Great. Now, can we see a rebound from this one? Yes, we will wait maybe for something like that to happen. However, that's not sure. So in this scenario, in this situation, given the kind of the sentiment in the market right now, for me, for the upside, I'd rather wait for a push above the 1.1483 zone here and then go higher. At this point, it's very close. It could even still fall off the cliff here and maybe fall back below this downside line. So yeah, a lot of things to consider, but still for the downside, I need to see a drop below this hurdle right here, the 1.1235 area, and then I'll get a little bit more excited with lower levels. All this right here for me is just, I don't like it. It's way too risky, and I mean, if you do prefer something like that to trade something like that, then of course do it, but be very careful. Have your stop loss in place. So yeah, guys, always, like I said, always do whatever you're comfortable with. So now then, guys, I need to jump off very quickly. So thank you very much for watching and listening. I really appreciate your time, guys. If you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. Thank you very much.